YouTube channel, How to Get an 800 Credit Score. My name is Lyndon Baptiste, and welcome everyone to the channel, to also as well. Thank you so much for joining, to also as well. If you're interested in learning on ways on how to build credit, how to increase your credit score to also as well, if you're looking for ways to find the lowest payments on interest rates, on mortgages, car loans, personal loans, business loans too, also as well. Maybe you just want to travel the world for free. Well, it all starts with having good credit. And if you're interested in all of these things, go ahead and hit the subscribe button and hit the bell for notifications too also as well. That way you'll never miss a single video as we make them here on this channel too also as well. If you want to support the channel, go ahead and join our Patreon. You can be a Patreon and sign up for a membership too if you want to support the channel too also as well. Our super chats are enabled here too also as well. So if you want to support the channel, you're welcome to send a super chat to also as well. All the links to follow me on social media can be found at the bottom of the about section of this channel too also as well. And share this video everywhere with all of your friends and family, with all of your social media networks on Facebook, Twitter, Pinterest, etc., with all your family and friends. Thank you so much for joining too also as well. Welcome to the 800 How to Get an 800 Credit Score live stream. Welcome to our credit family too also as well. Tonight, we have a really great surprise for you guys here. We have a guest by the name of Michael Holmes, and he's representing his company, Delta Credit Restoration, too, also as well, where he does credit repair. And tonight, he's going to talk about how to qualify for a mortgage. So it's going to be a lot of great information, a lot of knowledge being dropped tonight. So you definitely want to listen up to also as well. If you have any questions for Michael or me, by the way, feel free to ask them in the comments too also as well. I and Michael, we will also try to get to all of your questions and comments as much as possible too also as well. Before we begin, I'd like to recognize all the people who have joined in the live stream that we have with us right now. Right now we have 10 viewers here in the live stream, and thank you so much for joining. To all the 10 people who are watching right now too also as well. Feel free to comment as little as much as you like. If you just want to watch and listen along, that's always welcome too also as well. First and foremost, I want to welcome Michael Holmes from Delta Credit Restoration. He's the first person here in the chat too also as well. Welcome, Michael, to the stream. Also, I want to welcome Janelle to the stream. Thank you so much for joining. She's waving to you guys right now. And thank you so much for Janelle. What'd you say, Janelle?
You need to flip the camera.
Flip the camera? Why?
You're on that camera, we're like backwards.
Oh, no. That's something totally different. Yeah. But Janelle is a great help to the live stream because, you know, anytime I miss a comment, she lets me know, hey, Lyndon, you missed that comment or you missed that question. And she also helps to answer questions, recognize people, and welcome the new people too also as well. So as I'm saying that, you know, Michael is also a new person to our live stream. So everyone, please say hello to Michael from Delta Credit Restoration too also as well. Also,
hi, Michael.
Yeah, hi, Michael. Also, we have with us tonight, Dalai Lama's T. Thank you for joining us, Dalai Lama. It's always a pleasure and welcome back. Dolly says, hey. Yes, thank you, Dolly, for joining. We welcome you. Thank you so much. And also want to welcome back Keith Shep. Keith Shep, thank you so much for joining once again. Keith says, hi, Lyndon and Janelle. Appreciate that, Keith. And everyone, please give a warm welcome to Dalai Lama's T and Keith Shep too also as well. And one of our veterans who has been watching our live streams since the very first live stream, he was with us then, by the name of Cornell, Mr. Mentor Freeman. Cornell says, I'm here listening and trucking. Yeah, as usual, Cornell. I figured you was on the road again. Just be safe out there. Drive safe. Be careful. Okay. I want you to be as safe as possible out there too, also as well. So everyone, please give a warm welcome to Cornell, Mr. Mentor Freeman, too, also as well. And I want to welcome back Alberto Santoyo. He says, "Hey guys, hey, how you doing, Alberto? How's it going there tonight?" Everyone, please give a warm welcome to Alberto. Thank you for stopping by. Also want to give a warm welcome to Nate and Jess from the YouTube channel, Epic Travels, Frugal Living, too, also as well. Janelle and I really enjoyed you guys' live stream. It was definitely very educational. You dropped a lot of knowledge about, credit cards and travel rewards. We really enjoyed your live stream too, also as well. So everyone, please welcome Nate and Jess from Epic Travels, Frugal Living. And by the way, you definitely, if you're interested in travel rewards cards and learning about them, also you want to subscribe to Epic Travels, Frugal Living. Just click on their YouTube channel name here in the chat and then click on go to channel. When you get there, you want to make sure you subscribe and hit the bell notification so you won't miss anything there. Also want to welcome Victoria Michaels, who is a new person to our live chat tonight. And Victoria says hello to Michael too, also as well. So we didn't bring him on yet. We wanted to get the introduction and, welcoming everyone on first. So that way Michael has a few minutes to prepare and get ready. And we have a few minutes to prepare for him to come on too also as well. But Victoria, I guess you're a new person here to our chat. We want you to let you to know you're always welcome here. Feel free to comment as little or as much as you like to also as well. So since Victoria is new here, everyone please say hello to Victoria Matthews too also as well. Alberto says hello to Michael. Too also, Michael says hello to Victoria and Alberto. And Nate and Jess says, how are you guys doing? Yes, well, Janelle and I, we're doing great over here. We're all fired up about this live stream here. We're sure it's going to be a great one too also as well. Michael, we've been watching his videos for a while, and he drops a lot of knowledge about credit repair, how to, fix your credit report and all the details. So we really enjoyed his content. So that way that's why we want to share, his knowledge with all of you too, and introduce you to him and his YouTube channel, Delta Credit Restoration too also as well. Keith Shep, thank you for the hand clocks too also as well. Janelle says, hello everyone. Glad to see you all here. Nate says, thank you. You're definitely welcome. And Alberto's talking to Victoria there. Okay, great. Awesome. So I guess that's all the people that we have right now to go on. And right now we have 15 people with us here in the live stream. Thank you so much to all of you who are joining. Remember, guys, hit the thumbs up button. It definitely helps the channel out, helps YouTube promote it better too also as well. I guess we have one more. Supreme Deals popped up here in the live stream, is in the building. Hello, Supreme Deals. Supreme Deals is also a new person to our live chat, so we want to recognize Supreme Deals. So everyone, please say hello to Supreme Deals too, also as well. Who says, "What's up, guys?" Yes, we're doing great, and we're getting ready for a great live stream. So, without further ado, we want to welcome to you guys Michael from Delta Credit Restoration. I'm going to add him on right now. So if everyone can see the video and can hear the audio clearly, just go ahead and type the number 1 inside of the comments. Again, if you can hear the audio clearly, you can see the video clearly, just go ahead and type the number 1 inside of the comments. That way I know that, everything is working good. All right. How you doing there, Michael?
Fantastic, man. How you doing?
I'm doing awesome tonight. It's a great night. We had a good week too also as well. So, I've been telling a lot of our viewers about you, this week, and they're very, fired up about meeting you and hearing what you have to say about qualifying for a mortgage too also as well.
Awesome. Well, the thing is most customers do come to us because they want to buy a house, right? So we've kind of customized our credit repair process to kind of curtail to those kinds of customers. Either they want a mortgage, they want a business loan, or they want to get out of debt, or they have student loan issues, right? So today, what I thought we would do is kind of take a caveat approach and saying, okay, well, what do we really need to do to be lendable, right? I come from a banking background. I was a bank manager for many years, Fifth Third Bank, Chase Bank, for those of you who are old, Washington Mutual Bank, and South Trust Bank. So, what we've done with Delta Credit Restoration is we've taken that lender's approach to credit repair and brought it into our credit repair company. So when it comes down to trying to buy a house, what we really try to instill in a lot of our customers is that having good credit is not the same thing as being lendable, right? You can walk into a lender's office with an 800 score and still get declined. So we've got to make sure that, your overall financial portfolio is going to meet the requirements of that lender. And that's kind of what we want to talk about today,
Okay, awesome. And that sounds great too also as well, because there's a lot of information, going around about how to qualify for a mortgage too also as well, and how to get a great, FICO score, credit score too also as well. And we ran into this kind of similar things too also as well. We noticed that credit scores are important, but it's also important to maintain good credit habits and a good credit profile along with that too. And a lot of banks, are denying people with, excellent credit scores simply because of maybe their credit history or their credit profile too also as well.
Right. Well, that's the main thing that we want to really instill in our customers is that, most times when people are trying to fix their credit, they're fixated on that score, right? And our number one message to all of our clients is that your credit is not a score, right? That score that FICO makes for everybody, that's not even for you. That's for the lenders. It's a product, first of all. And really what we try to focus with our clients are the behaviors that lead to the score. And that's important when it comes down to being lendable, because the lenders, yes, they care about your score, but that's only a very small piece of the puzzle. Right? The score is just one of the many criteria that you're going to need. So really, when you're looking at trying to go in and get a mortgage, what we've done is we've kind of broken it down into certain activities that you want to do to start preparing yourself for that mortgage, right? Because one thing I've learned about credit is that it's not rocket science, but it's not basic math either, right? And when you start talking about the specific requirements of a lender, that makes it even more convoluted. So we're going to go through some activities that's going to show, okay, from step one, this is what you need to do. And as you go through that loan process, or as you start to approach that loan process, what do you need to do to make sure that you're going to meet the criteria of the bank?
Right. Exactly. So, I think that's a good thing to know, going forward, like for anyone that's planning on applying for a mortgage, to know, what to look for, questions to ask to also as well, in order to be better prepared, when you go in front of that lender too also as well. So you don't have a lot of surprises.
Yeah, the key to any relationship is communication, right? So that's a big part of what we're going to talk about. So so when you're starting to prepare for a mortgage, again, understanding that having good credit is different than being lendable, the first thing we want to do is start to gather our tools to be ready for the loan, right? And you want to do this several months in advance. Okay, don't do this the week before you want to apply for the mortgage, because obviously credit repair runs in a 30-day cycle, right? Because as you dispute things on the credit report, or you try to resolve things on the credit report, it's going to take approximately 30 days to, even if you fix it on day one, they've got to have time to report it and for it to reflect on the credit report. And if you stay tuned till the end, we're going to give some tips on how to kind of truncate that timeline and understand how the system works, and some things that you're going to want to do to make sure that you don't get caught about a week before closing with, oh, sorry, we can't do this loan because of something that you did trying to fix your credit. Okay. So the first step, really, the first activity in trying to make sure that you're going to qualify for the loan is to gather your tools. Okay. So the tools that we're going to need to gather, the first thing obviously is a credit report. And if they're tuning into your show, I'm assuming they know how to get a credit report. But if you still don't know how to get one, what we recommend is the first thing you get is you go to annualcreditreport.com and get that copy of the credit report. And the reason why I want you to get that copy is because that's probably the most detailed credit report that you can get, that has all the information that you're going to want. When did it charge off? Who is the original creditor? How many payments did you make? What was the date of last activity? Who is the current creditor on the account now? The only thing that you're not going to get from annualcreditreport.com, unless you pay for it, is the score, right? But that content is super, super important. And then on top of that, you're going to want to register with some sort of credit monitoring service. If you go to financialtoolshed.com, there's some opportunities there. That's one of our websites that's got just a bunch of financial tools on it. Obviously, you can go to Credit Karma. Everybody likes Credit Karma. Just recognize you're only going to get 2 out of the 3 bureaus, and don't trust the score at all. Just use it as a gauge. But really, the reason why you want to monitor it is so that we can start to see the success that we're having along the way, right? Because you want to know when things are coming off and when the score adjusts and when the balances adjust, so that you know when you're ready to apply. Okay?
Right.
So
I'm sorry. Go ahead, Michael. I'll let you finish that.
So the first step is get a credit report. Now, you can get one from your lender. If you actually go to the lender, some lenders are able to share that credit report with you. Some are not. It depends on where they buy their credit reports from. A lot of times it's proprietary information, but you can go to that lender and ask for a copy of the credit report. The reason why that's important is because who are you trying to impress? Right? You're trying to impress the lender. So I don't care what Credit Karma shows. I don't care what annualcreditreport.com shows. What I care about is what does the lender see and what does the lender care about, because that's who I'm trying to impress. Right? So getting that credit report from the lender is often good because they get also the opportunity to look at it. And most lenders have, especially if you're going to a mortgage broker instead of a mortgage lender, like at a bank, a lot of times they have what they call a what if scenario. So they can kind of coach you on what they care about along the way. And we're going to revisit that topic here in just a minute. All right. So step 1, get a copy of the credit report. The second tool that you're going to need are some bank statements. You're going to get at least 2 months bank statements, right? Okay. Because qualifying for the loan, we've got some money issues we're going to have to work through, right? And we need to know what's the budget look like, okay?
Right.
Not to mention you're gonna need to probably have that for the lender anyway. You'll probably have to refresh it with more current bank statements, but just know how to get them to your lender. You're gonna want to get a pay stub. If your pay stubs are consistent, just one is enough. If you have a variable paycheck, you're gonna want to get a couple of those so that you can kind of see a trend in your income history. And last, you want to gather your team. And the team is super, super important. You want to get your team together before you get started. And your team is your lender, your realtor, and your credit repair person, right? You want to have those 3 people in place up front and know who they are. You want them to communicate because they're the ones that are going to be painting that picture and addressing that picture that they're presenting to the underwriter that's going to ultimately make the decision on your loan. And you want all these players working in your benefit to get you that loan. So you want to get everybody up front, picked up front. And a lot of times, if you pick your realtor first, they'll have a lender. If you pick your lender first, they'll have a realtor. And sometimes it's a good idea to work with those people that lender or that realtor or that credit repair person is familiar with, because they work together well already, right? And ultimately, there's going to be issues that you're working through, and you're going to want that team working on your behalf so that you don't have to work so hard, right? So that's the first step, is get your team. And when it comes down to getting your credit repair person, just recognize that not all credit repair companies are created equal. You're going to want to definitely shop that around. 99% of the companies that do credit repair are pretty much fraud, either in their methods or their intentions. So you really got to do your research and make sure that you're working with a company that's going to not charge you up front and not just put everything in dispute, and actually look at the content of your credit report and gear it towards the loan type. Okay, so that's, again, activity 1, get your tools together. Okay, now once you've got all those tools, now you've got the meat of what you've got to do to get ready for this loan, right? So activity 2 goes into understanding what the goal is. Okay, there's no point in throwing darts in the dark. right? You turn the light on. The thing is if you know who your lender is and you know who your realtor is, well, now you start to understand what kind of mortgage am I going to get? And once you know what kind of mortgage you're going to want to get, now you understand the criteria behind the loan, right? There's no point in making your credit an 800 when all you need is a 580.
Exactly.
I'm saying it costs you more money, right? The goal here is to be lendable. Now, if you want to talk about having good credit, we're going to start talking about that in a minute, but really, we're really focusing on being lendable. So activity 2 is understand what the goal is, all right? Now, the first goal is deciding on the loan product. Each loan product is going to have a different criteria. Now, we did have a question about, what loan type do we suggest you go after?
Yeah, a lot of questions.
Okay?
Right.
My personal favorite is to go conventional. Now, there's basically FHA, conventional, USDA, VA. We're not even consider hard money. That's not even on the table. Don't even go there, right? Unless you're an investor, we're not going there, right?
Okay.
For your primary residence. So once you know what loan type you're going to want to go after, now we start unveiling, well, what are the requirements of the loan? I like conventional.
Right.
Why do I like conventional? Because one, you don't have to pay the private mortgage insurance for the life of the loan like you would with FHA, right? With FHA, you have to pay a private mortgage insurance, which could be $200, $300, $400 a month for the life of the loan with FHA. Now, with FHA, of course, there's only a 3.5% down payment. There's a little loose, underwriting guidelines. But the problem is you're going to get a higher rate with FHA and potentially, and the 3.5%. But more importantly, that private mortgage insurance. And the thing is if you've got student loans and you're going FHA, well, the student loans will kind of create a problem. And this is where that communication, this is why you want your lender up front, because you're going to disclose everything on your credit report, and that lender is going to say, oh, well, we're not going to go with this, we're not going to go with that. So you start to be able to unravel what you need to address on the credit report. But knowing the loan product not only determines the down payment, it determines the credit score, it also determines how you address the accounts on your credit report. If you've got a VA loan, they don't want anything that's in a payment plan, right? You got to have that stuff paid off. Whereas USDA, because there's a 0% down payment, that's going to require a little higher underwriting guideline because you got no skin in the game, right? So understanding what loan product you're going to have, what you're going to learn through your lender and your realtor, because the house determines if you go USDA or not, right? So having that dialogue with the lender and the realtor will determine what loan type you want to use. But I like, personally, conventional. There's no government involvement. The PMI doesn't last forever. And usually, because it's underwritten strictly by the bank and they're playing by their own rules, they're also more flexible, right? And they'll start paying attention to those things that really matter to the lender, like assets, right? And the capacity to pay, not necessarily your credit score. Does that make sense?
Yeah, absolutely.
Awesome. All right. So the second goal is, now that you understand the loan type, well, what are the minimum criteria, right? What is the minimum credit score? What is the minimum debt to income ratio that they're looking for? What is the total debt load? Do they care about charge-offs? Do they care about, you start to unravel the different qualifiers of that loan and the specific numbers that you've got to hit, because you don't want to over exceed it. I don't want to pay off more accounts than what I need to, because then I have less money for my down payment. Make sense?
Absolutely.
And then understanding the guidelines. That's really the gist of knowing the product line. And that doesn't matter if you're going for a business loan, credit card, car loan, or mortgage. Everybody has guidelines. So there's no point in applying for the loan if you're not going to qualify. Now, it's illegal for a lender to tell you if they're going to approve you for a loan prior to application. Right? It's banking law, right? That's how, certain portions of the population never got loans back in the day, right? But they can tell you if you're going to get declined. So if you go there and you know what your numbers are, debt to income, debt to credit scores, what's on the credit report, then you can address those things up front. We're going to get to that in just a minute. So again, activity 1, gather all your documentation, gather all your tools that you're going to need, gather your team. And then step 2 is understand what the specific goal that you have in mind that you're trying to accomplish so that you can set your sights on what you need to do to accomplish that. Okay. Step 3. Now, step 3 is where you've got your credit reports, you've got your bank statements, you talk to your lender, you've got your realtor, you've got your credit person in place. Now we're starting to address the deficiencies on the credit report. Okay. And at this point, we're going to start with the budget. And for all of our clients, we always start with the budget. Again, for me, I really don't care what your credit score is by and large. What I care about are the behaviors that lead to the score, and so does the lender, right? So that budget piece is super important because there are going to be things on that credit report that we're going to have to address that you may not get deleted. And the lender might not like it. So if you've got to settle those items and you don't have any money, you're going to hit a brick wall, right? So you got to prepare with a budget so that you've got a little bit of money left over every month. As a matter of fact, there are 3 categories in the budget that we always instill in our customers. We give them a budget based on the behavior that they've had in the last 2 months that we see on those bank statements that they pulled. That's why you get the 2 months worth of bank statements. And so we start categorizing all those transactions and we break them down into 4 broad categories. The first being the core cost of living, which is the rent, utilities, food, gas, and the car note, right? Because those are things that you have to pay. And then we go to negotiating items, which are things that you need, but how much you spend is negotiable, like car insurance, cable, cell phones, clothing. These are all things that we need, but how much we spend is negotiable, right? We're trying to look for areas of opportunity in the budget so that we can redirect some of that to pay off the stuff that we got to get rid of on the credit report that we can't delete. Not to mention, we got a down payment we got to come up with, right? Not to mention, there's a physical cost of moving that we got to deal with, and a year's worth of insurance and escrow and all that other stuff that's going to come out of pocket. So we got to get that budget in place for that purpose. Next, as we're starting to address those items on the credit report, the one thing that you want to really be cognizant of is the debt to credit ratio. If you're looking to really boost that score, part of your budget is going to need to be to pay down the credit cards to below 30% of the limit. That's a huge part of your score. And we always start there with our clients because it's 30% of the score. And if you've got one credit card with a $500 limit, with a $400 balance, you just lost 30% of your score, and it takes bringing that balance down to 150 to get that 30% back. And that might make you lendable, right? And now you're looking at the rest of the stuff in your credit report like, do I really need to address this? Because technically, according to my score, I'm lendable, right? So the whole purpose of this process is to make sure that financially we're prepared to handle what we have to handle, but we're not overdoing it to the point where we're spending the money that we're going to need to actually close on the right?
Right.
So so again, the budget, those 4 categories, again, the first is your core, the second is the negotiable, the third is the ambiguous spending. All right, the ambiguous spending is money that you spend on things that during the month, but you really don't know what you bought, right? So those are things like big box store transactions like Walmart, Target, Dollar General, that kind of thing. And ATM withdrawals, right? You took $100 out of the ATM, could have paid the electric bill, could have got a stack of ones and gone to the club. I don't know. It's ambiguous, right? So we want to make sure that we understand where all that money is going, because that money that's leaving our pocket and going to something that we can't account for, well, that could be used towards fixing our credit and buying the home. Okay. Now, a lot of people say, well, this has nothing really to do with credit repair. But it really does, because if you don't do this step, if you don't go through the process of financially preparing for this transaction, you run the risk of it failing after you've invested a bunch of money in getting it done, right? And that's what you really don't want. You don't want to put the money for the appraisal and the inspection and get turned down at the very end because you can't afford the HOA fee.
Right.
Right. So we got to make sure we understand that budget. We got to make sure that the lender understands that budget. We got to show them that we have the capacity to make this happen. The 4th category that you want to make sure that's in that budget when you start categorizing your stuff is what we call extracurricular spending. That's eating out, entertainment, fees, that the bank charges us for ATMs and overdrafts, that gym membership we all have but nobody ever uses, liquor store transaction, Disney World here in Florida, all those things, those are all extracurricular, and those are opportunities in that budget to get your finances right, to handle this transaction. You got to do this first. You got to do this first. I cannot emphasize this enough, because even my most affluent clients, we've got customers that make over $1 million a year, but if they don't get this piece right, the fact that they don't save anything every month is going to keep them from getting the loan.
Right.
So that's activity 3, is getting that budget together, understanding the matrix of your budget and where your opportunity is, because you're going to want to cut down so that you can start stockpiling cash. The main reason why is because when you look at a mortgage, there's 3 things that they're really going to look for to qualifying you for that loan. The first is the capacity to pay. So that means you've got a job. If you ain't got a job, don't apply for the mortgage, right? Or if you don't have income, there's no point in it, right? The second thing that they're going to look for is assets. And this is not cash. This is things like your 401k, your IRAs, your CDs, your properties, things that you can fall back on. Mm-hmm. And then the third that they're going to look for is your credit score, right? Have you been paying your bills on time? So this budget piece, right, will make sure that the payment history is good. It'll make sure you've got assets sitting in the bank somewhere. And of course, it's going to help with the credit score as well. So you've got to, like I said, when we do a client, when we get a new client in, 5 business days after we meet them, we create what we call a general action plan, and literally 60% of that or 80% of that day is just talking about how do we fix your finances to weather this transaction and get to be lendable. So I know I spent a lot of time kind of going over and over that, but if you don't do this piece, you will fail. It just happens so often. I have to bring it up. And then once we get past the budget piece, let's say you've got, I don't know, $10,000 worth of bad stuff on your credit. Okay. More often than not, when we go through next the dispute process, you probably eliminate, let's say, half of that. Now you've got $5,000 left over, right? And let's say you then negotiate that down by half, and now we're down to $2,500. Well, if you do your budget, right, and you only have $500 a month left over to pay down the debts that you can't delete, recognize that $2,500 is now going to take you several months to get to zero. So you start realizing your timeline as to when am I going to start getting approved, right? When am I going to be lendable to get this loan that I want? And it starts with that budget. So we got a couple of extra questions. David asked, I have over 200,000 in total credit limit from credit cards. Is that enough? Maybe. The issue with your credit cards is what is the balance, not what is the limit. Okay. If you got a $200,000 credit limit and $195,000 balance, your credit score is in the toilet.
It's going to tank.
Yep. So you got to get that balance down or increase the limit a little bit more to create that debt to credit ratio that's below 30%. Okay. It's an immediate super jump to the score. If you don't have a credit card, by introducing one into your credit profile, that's again a 30% lift in the score. Right. So yeah, on the credit card, great that you got a $200,000 limit. That's fantastic. That's wonderful. But if you got a $195,000 balance, you got problems. Right. Oh, by the way, Carolyn Pace, thank you for coming in. She's one of our clients. I appreciate you logging in today. And thank you, Cornell, for the comment as well. Let's go to the next step where you've pulled your credit report and you've noticed I got a lot of red on there. How do I address the red things? How am I going to dispute these things? And how am I going to get things off my credit? So the first thing I want to mention is when you're doing your dispute process, okay, recognize that if you get to the end of your process and you apply for the loan, if you've got anything in dispute, recognize that will kick the loan out as a rejection. So you don't want to just dispute everything. We're not Lexington law, right? We're not going to just throw everything in dispute and say it's not mine just because, right? What we want to do is we want to have a systematic approach as to how we want to address the items that are on our credit report. And my suggestion is that before you start disputing stuff on the credit report, since you know who your lender is, go to your lender and ask, what do you care about? Okay, because with mortgages, they don't care about debts equally. Mortgages don't care about medical debt. They only care about medical debt to the degree that it affects your score. So if we spend a bunch of money trying to pay off debts that are medical that we couldn't get deleted, you're just really wasting money because the lender probably doesn't care. But you want to ask that lender first. You want to open that dialogue to make sure you're having this open line of communication and understand what they expect and what they care about. So you definitely want to, before you start disputing stuff at random, ask them, hey, what do you care about? And focus on those items as well. Now, when you do your dispute letter, and we actually have videos at our channel that shows you how you want to structure your letter. So if you go to Delta Credit Restoration on our YouTube channel, we've got about 50 videos about the whole structure of setting up your dispute process and negotiating the debts and all that stuff. So tune into that. But really the main thing that you want to remember about your letter is that you want to be specific, right? You want to look at that and say, okay, well, why is this on my credit report and do I legally owe the money? Credit repair, the process of credit repair is really to emphasize what are you liable for, right? It's not just about getting stuff deleted, because even if you get certain things, like if you get a judgment deleted off your credit report and you get that loan, it doesn't matter because the title company is going to find it. So you still got to address it, right? But there are certain things that you may not have to address. So you want to really pick and choose why you're disputing the process. Maybe it's the dollar amount. For instance, a debt collector cannot charge interest or fees. That's illegal unless it's in the original contract that you signed with the original creditor. So that's a dispute item, right? If debt collector B is trying to collect it, well, who the hell are they? Where's company A? And what gives you the right to collect on it? That's a disputable reason, right? Prove to me that you're the rightful person to collect this debt, right? You know, statutes of limitations. You know, there are 2 statutes of limitations of debt: how long they can report and how long you legally owe. If they're claiming that you legally owe something that you legally don't, well, is that accurate information, right?
Right.
So you want to start getting legitimate reasons as to why you're disputing in that letter. You also want to give timelines as to how long they give you to you give them to respond. There's a common misunderstanding that if you go 30 days without disputing something, once a debt collector gets it, that you lose your right to dispute it. And that's partially true because that's how the Fair Credit Reporting Act is written. But there's also laws that say under 623AA that you don't have a timeline as long as you dispute with the original creditor. So don't let them fool you. You definitely want to address every item on your credit report that matters despite the timelines. We do got a question from Nate and Jess. They asked, do lenders ever count student loan debt? I'm glad you asked that. Yes, they do. But really, that's where that 800 score becomes irrelevant, because if you've got a bunch of student loan debt, it becomes a debt to income issue that matters, right? If you're going FHA, the problem with FHA is if you've got student loans that are in default, anything but a standard or an extended standard payment, deferred, forbearance, income-based, income-driven, income contingent, any of those other kind of payment types, what they're going to do is they're going to use 1% of the outstanding balance, not the actual payment of, say, 0 against your debt to income ratio, and that can kick you out of the loan. So it's not the credit that got in the way, it's the income. If you're going VA, what they're going to do is they're going to take the entire balance, take 5% of that, right? And then that's your monthly payment. Or you take 5% divided by 12, that's your monthly payment. So the student loans do matter. And again, that's an issue you're going to want to bring up to your lender up front so that you can squash that. And it's an old Shakespearean thing, right? If you read Shakespeare, Shakespeare was a big debater, right? He was a master debater, right? And the one thing he would do is he would bring up the objections of the person he was debating against up front. So when they brought it up, it's too late. It's already addressed it. And that's what you want to do with your lender, right? That's what you want to do with the underwriters. Approach these things up front, find out the solution, address it so that when you do apply, it doesn't get in the way. Make sense?
Absolutely.
Awesome.
Absolutely.
So now the also thing, you want to prioritize your disputing based on, again, the type of debt. There are certain types of debt that lenders care about. One, they don't like anything that's real estate related. So if you got evictions, apartment complexes, utility bills, mortgage deficiencies, these are like say short sale deficiencies. If you did a short sale and they're trying to come after you for the difference on the short sale, right, or foreclosure, then those real estate related issues are a top priority to lenders. Okay. If you've got an aggregate of over $2,000 in collection, they're going to care about those as well. So you're going to want to dummy that down to below $2,000. Again, anything in dispute, you got to get out of dispute before you apply as well, because again, that will kick out the loan. So there's a certain priority list that lenders have, and you want to, again, ask your lender what their priority list is, but that's pretty much it. And you also want to look at if you've got debts, and it depends on what state you're in. The statute of limitations on debt is not forever. You don't owe debt forever. So like in the state of Florida, after 5 years, unless it's federal debt, you really don't legally owe that money anymore. So there's no, you want to tread lightly on debts that are beyond the statute. And that's a legitimate reason that you can do with a letter of explanation to the lender and say, hey, look, I don't owe this money anymore because it's beyond statute of limitations. They can't sue me for it. It's no risk to you. I don't want to pay it. And more often than not, they won't hold it against you. So again, understanding the guidelines and understanding your rights as a consumer will get you through the loan process. And that's really what we're trying to do. We're focusing on the behaviors of the things that really matter, right?
Now, on that note, I'm sorry to interrupt here, Michael, but Cornell wanted to know, you have a link to your channel, and Cornell, you could just click on his name in the chat. Is Delta Credit Restoration. I put it there up on the screen. And then when you click on that, his name, then you just click on go to channel. You have to right click it. And then when you get to the channel, you can subscribe. You should be all set from there. Just let me know if you have any issues with that. All righty. And maybe we can put a link to his channel too also as well. But that's pretty a simple way to get to his channel. Sorry about interrupting you, Michael.
No, not a problem. That's what we're here for, right? So now you've sent your dispute letters in, right? And some of them have been deleted. Some of them have not. They've come back and they've proven the debt. And now you're faced with, well, what do I do with what's left over? So before you start resolving those accounts that are left over, you want to take that list of accounts and take it to your lender and say, okay, I've got 3 accounts, 4 accounts, whatever's left on the credit report after you've gone through your dispute process. Now you're faced with, well, I got to settle the rest, right? If I want to get rid of it. What you've got to remember is that just because you pay a debt to a debt collector or even the original creditor, they're not going to necessarily delete from the credit report. Right. What you don't want to pay are very, very old debts that haven't reported recently, because that will actually lower your credit score if you pay them. Because if they don't delete for payment and they update the balance, and it's been 4 years since they've said anything about the debt, right? And now they update it. Well, now it looks current, and to the bureaus that makes it new, so it lowers the score. So you want to kind of pick and choose which ones you pay off based on really what the lender wants, and of course what it's going to do to the credit score, because you don't want to pay something obviously it's going to lower the credit score. But you really, 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 really want to focus on the deletion. And the best way to do it is obviously get it in writing, so that when it does happen, the thing is if you really want to expedite the process, it takes the bureaus a while sometimes to get updated. But if you get a deletion letter from that creditor, you can take that to the lender and they can do what they call a rapid rescore and kind of expedite that process. Once a lender pulls your credit, it kind of goes through their filter system, right? That's why if you pull your credit at Bank of America and you're at a 700 and you go over to Wells Fargo the same day and they get you at a 650, that's why, because they go through their own filters and they get their score that really resembles what their palate is accustomed to. And what makes it even more confusing is Wells Fargo might like your 650 more than Bank of America likes your 700. So again, that's where that communication with your lender really makes a difference, right? So, so you want to be cognizant of that. So as you start to address those accounts that are left over, if you kind of take a step back and see how this is all played out, let's say month one, you started your budget, right? And you created a savings mechanism, and you're on that track, and you send your letters. Well, now 30 days have gone by. Now you've got the responses. You either need to send a second letter, or you got the deletion, or now you're looking at settlements. Well, now you're working on the second 30 days, but by now you've been working on that budget and you've got some money saved. So if you've got a settlement to do, you're ready. If you don't get that budget ready in the beginning, when you get to that point, now you're at a stalemate because you ain't got no money.
Right.
You don't have anything to pay anything off. You're great with the deletions, but what's left over, you can't move forward because you don't have a budget. So when we create that budget, there's 3 categories that you want to make sure are in that budget to make your credit repair process work. The first thing that you want to have is you want to have a savings mechanism, and that way you have money saved up for the down payment, the appraisal, the inspection, and paying off the debts. The second thing that you want to have is you want to have an allowance. Why do you want an allowance? Is because you're going to go stir crazy during this process, and you need some elbow room money to kind of blow off some steam to stay on track. And then the third thing you're going to want is what we call redirect. Redirect is the money that we will use to pay down the debts that we can't delete and pay down the credit cards so that your debt to credit ratio is good. And the reason why we don't want to use our savings for that is because the savings is really also for the inevitable. If it takes you, let's say, 4 months to fix your credit, during those 4 months, something's going to go wrong. Something weird's going to happen. Let's say if you start today, what do we got coming around? I don't know, holidays, right? And that's going to challenge your resolve to stay on budget. So you got to have a mechanism in place prepared to pay down the debts, as well as a savings mechanism to handle the transaction when the time comes. So you need them growing at the same time. Will it slow you down? Yes. But will it be done the right way? Yes. And that's what you want. You want to do it the right way so that a year later, after you get your home, you're not selling it out of foreclosure. Right? So, so we're at the point now where we've got the deletions in place. We've talked to our lender. We've got the dispute letters out. We've got the responses. We've settled the debts that we need to settle. And now we can move forward with the mortgage. Now, going back, there's a couple of tips that we want to give as you're going through this process that you want to be kind of cognizant of. The first is don't overdo it, right? You don't want to dispute everything, because then you got to work on getting everything out of dispute. Don't dispute positive accounts, obviously, and things that are 6 years old with a late pay in 30 days from 6 years ago. It's not really going to matter on your credit score, and that's just going to be something you're going to have to get out of dispute later, which is complicated. You would think that you could just contact the bureaus and say, hey, I want this out of the dispute. Well, what happens when you do that, if you dispute with the bureaus, which we never recommend, which is something kind of weird. We never dispute with the bureaus. We always dispute with the original creditor or the furnisher of the information, because you got to get all 3 bureaus to agree with you, and they're all for profit and they're all independent. But if I get the debt collector or the creditor or whomever and change their mind, either by force or by choice, they're going to change all 3 bureaus for us, right? So you always want to address the creditor, but you only want to dispute those things that matter so that you don't have so much cleanup in the end. And also, you don't want to pay off everything, because you may find that it actually lowers your score, okay? Right. Also, you don't want to close anything, because by closing your accounts, you're going to lower your score. And I know that doesn't make a lot of sense, but I'll give you a great example. I had a customer come in and he was fixing his own credit, right, before he came in. And what he did is he went and got a credit card to help boost his score. And then he had a truck. And in the truck, he was in year 4 or 5 of paying off the truck. So what he did is he paid it off to show his creditors, hey, I'm a good investment. Well, when he did that, he absolutely tanked his score because of the way that the score is calculated. And I'm sure you already understand this. There's 5 matrix to your score: payment history, debt amounts, which is the debt to credit ratio, average age of the account, new accounts, and what's the 5th one? Payment history,
credit mix,
debt to credit, credit history, debt amounts. Having a brain fart.
Credit mix.
What is the 5th one? New credit, average age, payment history, debt amounts, and brain fart. So, but either way, you want to look at that matrix and attend to that score that way. But you don't want to pay everything off because one, you don't have to, and two, you can lower your score. Again, communicate with your lender what they care about that you want to pay off so that it doesn't go there. Second tip, remember your timelines. Remember, if you put a dispute in, you got to give them 30 days. So if you got to apply for your mortgage in 2 weeks, you're going to have a problem, right? Also, recognize the shortcomings early and address them with the loan officer so that you're not spinning your wheels. You only want to address the things that the lender cares about. Also, you want to make sure that you are that you're using your checking account. The reason why is because they're going to pull it. And they're going to look for irregular activity in the checking account. If you don't have a checking account, get one because they're going to want to see that. And when it comes to your checking account, it also has to do with your down payment. Where's your down payment going to come from? You've got to keep that money in your account for 90 days. Otherwise, they're going to want to source that down payment. You know, real estate is a great place to launder money. So they want to know where you get the money from. And if you get a gift, what we recommend is you don't get the gift till the very end. That way, you don't have to source it. And the problem is a lot of times if you get it too soon and you put it in your account prior to 90 days to your application, not only are they going to try to source where you got it from, but they're also going to source where the person you got it from. And if you got grandma's account, grandma don't want everybody looking in her checking account, right? So you're going to want to make sure that you got that money with enough advance warning so they don't go fishing where you got the money from. You can't just pull 10 grand out of the mattress and expect to use it to buy a house. And again, number one thing we always tell our customers, work on the budget first. The one thing that always gets the customer at the very end is about 4 days or 5 days before you close, they're going to want a year's worth of insurance. And you know, most people don't plan for that. And that could be $12, $15, $2,000. If you're in a flood zone like in Florida, that could be $3,000, $4,000. Now you can't get the loan because you can't afford the insurance, right? So you want to make this a thought out process. And pace yourself out. So David is asking the question, what do you think people like Grant Cardone who think buying a home is a scam and that you should only be putting your money into things that make you passive income? Well, the thing about buying a home is that is probably one of the biggest investments that you'll ever make. If you're renting, then buying a home, the number one thing it does is it's rent control. We have a lot of older customers in their 70s that buy houses. Why? When they're 70 years old, they're never going to pay off the house. Well, it sure beats the rent going up every year, first of all. Secondly, as you own the home, it's implied typically that you're going to be creating equity in that home. While you can't spend equity, you can leverage it, right? And use it for things for the house. You need a new roof, you need a new car. You know, for a lot of my investors, what we will do is we will take a piece of property, pay it down to zero, get an equity line on that house, and now that's our bank. We don't have to worry about qualifying every time we need to get a loan, right? Home ownership is power. You know, you don't want to rent and pay somebody else's mortgage. That's just throwing money out of the window. You want to own the property because it builds your overall net worth. And studies have shown people who own houses have a significantly higher net worth because they own the house, right? And it's just much better. As far as it being a scam, I wouldn't go that far. It's not a scam. It's legacy, right? It's something that you can pass on to your kids. It's something that you can rent out and create a form of income with. It's about how you handle it, right? And that's what we always tell our clients. You know, stuff happens in life, and you can't avoid that. But what you can change is how you react to it, right? You can lose your job. It could be the best thing that ever happened to you, right? That's how I started Delta Credit Restoration. I worked for the bank, lost my job. You know what? Let me go into business. Now, 10 years later, I'm not going back to a regular job. Right. Or you can win the lottery and it could be the worst thing that ever happened to you. You can lose everything, right? It all depends on how you handle it. So buying property is definitively one of those things that we recommend because it's just the best thing to do. Carolyn, my hubby and I signed with Delta Credit. Oh, thank you. In mid-February, 529, following Michael's program. And okay, well, I appreciate that very much. 744, that's a good number. So again, going back, you want to make sure that you're following a timeline. Start your budget first. When you're addressing the items on the credit report, make sure that you're only dealing with those items that are pertinent to the loan. Save those medical debts kind of for last. You can dispute them and try and get them deleted, but you don't want to pay them until you talk to your lender about it, because really in the end, again, having good credit is not the same as being lendable. And you can walk in there with an 800 score and still get declined, or you can walk in there with a bankruptcy on your credit report and still get approved. But the key is understanding what the lender expects of you, because that's really what's going to matter. And then the greater all scheme of things, for me, credit is not a score, it's a behavior. So we really care about the behaviors in the checking account, because that's really what's going to dictate how you behave with the items that are on your credit report.
Okay, awesome. Great advice there, Michael. So basically going back to, I thought you mentioned something about appraisals.
Right.
So basically, when you're talking to the lender, and you're considering applying to that lender, should you make sure that you have a good chance of being approved for that mortgage before you go out and pay for an appraisal?
Yes. Well, here's the thing. The first thing you're going to want to do after you apply, and once you go under contract, the first thing you want to do is get the inspection done, right? Because the inspection is going to dictate whether you want the house or not. And you don't want to spend money on the appraisal until you get the inspection.
Right.
Now, the appraisal will also uncover things that you may not want in the house, but really that's the inspection's job. And the inspection is typically less expensive than an appraisal. So you want to get that done first, because if you get that done within 15 days of contract, you can back out, right, without losing whatever deposit money you put up front. So as soon as you apply for the mortgage, or once you get approved and you go under contract, you want to order that inspection immediately, get the inspection done so that you know if you want to back out and then move forward. You don't want to pay for the appraisal until after the inspection comes back.
Right, absolutely. Okay, let's see. I think we had another comment here. David Amex King Moss. I don't know if you wanted to speak on that briefly or as much as you wanted to.
On which topic?
I'll put it up on the screen. He's talking about paying old debts back that are past the statute of limitations.
Okay, so let's talk about that. What we never are trying to do is get our customers to skirt their obligations, right? But the law is the law. If you are beyond statutes of limitations on the debt, you don't legally owe the debt. That's the law, okay? And when you've got a goal that you need to accomplish, you want to focus on those goals that matter. And if you don't legally owe a debt, to pay them is voluntary. Not to mention, it can put you in a world of hurt. If a debt, let's say you got a $10,000 credit card that you paid off, and the debt collector that you didn't pay off, that charged off. It's now 7 years later, you're in the state of Florida. After 4 years, you don't legally owe a credit card debt anymore. But the debt collector calls you and they say, you know what? I tell you what we'll do is we'll settle that debt, that $1,000 debt, or that $10,000 debt for $500. You say, great, I'll do it. You send them the $500. Now they sue you for the rest. Because now that you've made the payment, you've restarted the clock on the statute of limitations. You see what I'm saying? Once you admit the ownership of the debt or make a payment against the debt, they can sue you for the debt, because now you've restarted the clock. So no, I never try to get people to skirt their obligations. It's quite the opposite. We try to focus on the financial behaviors of our clients to make sure that they can handle their debts, because I believe in the ripple effect. I'm a small business, just like you. Right? If somebody doesn't pay my bill, I suffer. My family suffers.
Right.
Same thing if you don't pay your bill at Capital One. somebody's going to suffer because of that. That's a business that started off as a small business. You see my point? So
Right.
no, I don't believe in skirting obligation because we just simply don't want to pay it.
Right.
What I'm talking about is, what are you legally liable for? And let's focus on what you're legally liable for so that you understand what your rights are as a consumer. In the world of credit repair, there's a phrase that we've coined, and that is, it's legal if you allow it. If you let somebody strong arm you into paying a debt that you don't legally owe because you don't know what your rights are, it may as well be legal. Because you don't know what your rights are. So whether or not you want to pay that debt, that's 100% up to you. But I'm telling you what your rights are and the way the system works and how you can accomplish your goal. So no, I don't believe in skirting your obligations because that's the wrong message, right? I want you to be financially sound. That's the difference between Delta Credit Restoration and a lot of the other companies, and that is that we want you to be financially sound. That's good credit. I don't care what your credit score is. What I care about is, are you cognizant of what's going on around you financially? And do you have financial safety nets in place? Savings, available credit, you're properly insured, and you've got investments. That to me is good credit. It has nothing to do with your credit score. The credit score is just a product somebody's trying to sell you, but unfortunately, you need it to get a loan, more so. Now, when you're trying to get a loan, one thing I forgot to mention is that there's really 3 things that they're looking for. And these are the 3 things you need to focus on. The capacity to pay, be able to prove your income, and make sure that you haven't changed industries or gone from a W-2 to a 1099 in the last 2 years. You need to show assets to fall back on, which I did actually mention this. And third, you want to mention, you want to be able to prove payment history, positive payment history. Okay. Now, Terrence asked the question, what is the best loan for a first-time buyer trying to buy a duplex or fourplex? Well, you're bringing up a different subject of home ownership where you're really talking about an investment. So when you're talking about investment property that you're not going to live in, okay, the credit requirements are going to be a little bit higher. And if you currently have a mortgage, first of all, that's an FHA loan, recognize that you're not going to be able to get a second FHA mortgage. Okay, so you're going to want to have that conversation again with your lender because the criteria is going to be a little bit higher than what you're going to have with just a normal single family residence, owner occupied property that you're going to buy. So usually the credit scores, you're going to need at least a 680 or higher, or you're going to need a larger down payment, right? And you're going to also have to show the capacity to make the note if there isn't already a tenant in place. If there's a tenant in place and you can prove that they made a deposit and they paid 1 month's worth of rent, then usually they can offset the mortgage and not use it against your debt to income ratio.
Okay, awesome. Great answer there, Michael. That was some really great knowledge that you're dropping there. I believe the next question has something to do with like assets, and it's coming from Nate and Jess.
All right, especially with the opportunity of Charles Schwab going commission free, do you think building assets through stocks and extra income through dividends good for applying for a loan? Yes, you definitely want to have stocks, mutual funds. You want to have investments because for me, that's what good credit is, right? Good credit is being able to withstand the inevitable. People come to me all the time and say, "Oh, the only reason I got bad credit is because I lost my job, or I had a baby, or I got sick, or I got divorced," right? Well, the question, the reality is that we all go through that at some point, right? The question is are you prepared? And that's really what the lenders want to see, right? And that's really, to me, what credit repair is all about, or credit building is all about. Credit repair is about fixing it on the back end. I want to go into these relationships with the right behavior. So yes, Charles Schwab, as a matter of fact, I got a customer today. He has a 0 credit score, but $3 million at Schwab, and he's not lendable.
Wow.
That's something to think about. He doesn't have the 3 matrix. He only has 1, assets. He doesn't show the capacity to pay because he hasn't been paying on any debts, right? And he doesn't have a job. He just manages his money. So he can't get a loan. So yes, you want to try to have all 3 of those different things. And we have a video called Being Lendable versus Having Good Credit. And it kind of explains that whole triad that they're looking for from a lender. So definitely invest. The way I look at it is that if your savings account or your investment accounts are growing every month as a result of you investing, dripping into that program, then your light bill is fine. Your credit card bill is fine, right? We stop paying the credit card bills and all that stuff when we can't pay the utility bill, right? So if you've got your budget in place where you're still able to invest every month, you're lendable. The score is incidental to your financial behaviors. So if you're in the place where you're able to put money every month into a Schwab account and still pay all your bills, you're gold.
Right. Awesome. Okay. Thank you for that, Michael. And also we have our next question also coming from Nate and Jess. And they're talking about side hustles. I don't know. I'm not sure if they're referring to like maybe what we do on YouTube or other different side hustles, maybe buying and selling stuff on Amazon, eBay, maybe. I'm guessing.
That is depending on the loan type, the underwriter, right? Sometimes you can go stated income loans, right? You may pay a higher down payment, you may pay a higher rate, but if you're not registering your income with the IRS, where you can prove that you've claimed that as income, then you're gonna have to go with a stated income loan, which will be a little bit more expensive, but you might be able to include the income that you haven't filed with the IRS. But second income, it will also depend on how long you did it. They're gonna wanna see 2 years worth of it. So make sure that you've got that paper trail. And that's the reason why you want the checking account, right? So they can see the deposits that you've been making from that side job. And that's why that checking account is so important. They want to see the basic financial behaviors.
All right, absolutely. Those behaviors, are very important. That's why, you definitely want to keep a checking account and savings also is part of the assets part of it, right?
Well, they don't use actually cash as an asset. They usually look for cash that's been invested in something else, but definitely a large cash balance will definitely make them, blink twice. So, the more that you can accumulate, the better position you're in.
Okay, awesome. Okay, I guess Nate and Jess has a comment, I believe.
Hi, Michael. I would recommend attempting to haggle down medical debts with hospitals or medical billing. Jess and I were able to save $500 by calling in and haggling with the hospital and doctor's office. Yes, never pay full price, right? But the important part is if you're going to pay them, you want them to delete, right? Because again, if it's an old medical debt and you pay it and they simply update the balance, you may find that it lowers your credit score. And again, medical debt, lenders don't care about. So you want to deprioritize your medical debt unless your score, when it's all said and done, doesn't meet the minimum criteria. That's when you want to go approach the medical debt, because at that point, it will matter in the lending process. Again, you want to pay off all your medical debts, knock yourself out, but that's not going to necessarily make you any more lendable than what you may already be.
Right, absolutely. Okay, great. And we have another comment from Cornell about buying his home, buying his house.
Definitely the best decision. I mean, with a house, one, it builds stability, and you build that equity. You build the ability to borrow against the house, which I don't recommend, but you still have that ability. Let's say there's a major issue in your life, maybe kids going to college and they don't get it. You make too much money for them to get any FAFSA. I mean, equity in a house is a big deal. Not to mention it can lead your way into buying more houses. You can take equity out of your house and buy another house. So buying a house is by far 90% of the people that come to us to buy a home. The rest are trying to just get out of debt, student loan debt, or buy a business.
Okay, awesome. And thank you for that question, Cornell, for that comment, by the way, letting us know, buying a house is not all that bad as Grant Cardone may make it seem on YouTube.
No, I don't. I mean, owning land. I mean, you gotta understand. There's only one planet. There's a finite amount of land there, and it's never going to be. There's never not going to be a market for real estate, right? And real estate really runs on a 7-year cycle. So you can kind of time it as to when is a good time to get in, when is the time to get out, when is the time to rent, when is the time to buy. It just takes a little bit of research. And if you're not going to invest in property, then invest in something else that you're more comfortable with. The idea is that you don't want to work for your money. You want your money working for you. And again, that all has to do with credit. People, we're so fixated on that stupid score that we start believing that that's our credit, and it has nothing to do with your credit. That credit score is a matrix that the lenders use to test their palette of risk. And what you've got to remember is your credit report doesn't show what your income is. It's a fallacy. It's a product that's designed to charge you more money. Think about it like this. Your credit score works like a GPA. You turn in all your homework assignments every day. You get straight A's. Everything is good. You forget to turn in that one homework assignment. You just missed that one thing. Your score drops to a C. But if you turn in the next homework assignment, it doesn't go back up to an A. You got to get 25 more A's, 25 more B's just to get to a C.
Right.
And what you got to also understand is FICO, the company that makes your credit score, they are in bed with the credit bureaus. They work together, just like they work together with the creditors and the debt collectors. You are not the customer of the credit bureaus. You are the natural resource. They buy and sell your information to the creditors and the lenders and the debt collectors. Okay, so you got to just kind of keep that whole perspective in mind when you're dealing with the bureaus and the debt collectors.
Yeah, absolutely. And Nate and Jess had another question here about living in one of the units too also.
Right. If you're going to buy a duplex and you're living in one of the units, it now becomes owner occupied. So that really affects the lending. You don't want to go in as an investor if you can help it, because it's just a harder loan to get. It's much, much more expensive. So you really want to, if you can occupy the property, not to mention, that's a great world to live in, right? Because your tenants are going to be basically paying, if you price it right, the entire mortgage. So you basically live for free. So if you can work that out, man, more power to you. That's a great, great thing to do. I love it. If you can stand having neighbors.
Yeah, absolutely. Okay.
Right.
And let's see, Nate and
Same thing with
Jess.
commercial property, by the way, if you're going to try to get financing for a commercial property, being a tenant in that commercial building is huge when it comes to underwriting. We really didn't go into like business credit and that kind of thing. It's a whole other animal. But yeah, tenancy in the property is a big deal.
All right, thank you for sharing that. Thank you for that question, Nate and Jess. I think Nate and Jess has another question here, and this is about manual underwriting.
Okay, so if you go to manual underwriting, you're probably going to get declined. What lenders like is like a DU, where they enter you in. They don't want to manually underwrite, and you don't want that. It's like being audited. I worked for the bank for 20 years. We don't. When the auditor comes in, we want them to see what they need to see and get out. Because once they start digging, they're going to say, what about this? And what about that? And what about this? So you don't want to go into manual underwriting if you can help it. And that's where having that communication with that lender up front is going to matter, because if you get something that's going to throw you into manual underwriting, now you're going to have to claw and fight your way through this loan process, and that's what you don't want. You want to get that automatic approval, even if it's an automatic approval with conditions. They're going to say, okay, we'll approve the loan, but you got to pay this off, pay this off, pay this off. And now you know what your path is. Right. So, typically we want you to pull your credit before you go to the lender. But if you allow the lender to pull it, then it does give you more pertinent information that the lender cares about. I just recognize that it's going to lower the score a little bit.
Absolutely. So it is a trickier process then.
Right. It's all about timing. That's what I'm saying. You want to time the event properly.
Right, absolutely.
That's all the question for now.
Okay, let's see if we have. Okay, I believe that's all the questions for right now. So what I want to do right now is recognize some of the other people that came on while Michael was speaking. And so first and foremost, I want to say a special thank you to David Amex King Moss. Thank you for joining us, David. Dolly, and thank you for that question, by the way, too. Thank you to Dolly Lamas T. Thank you for joining once again, Dolly Lamas. And Keep Shep, welcome back, and thank you. And Cornell, Mr. Mentor Freeman, thank you for joining too, also as well. Of course, special thank you to Michael Holmes from Delta Credit Restoration for being our guest today and sharing such wonderful knowledge and information too, also as well. Special thank you to Alberto Santoyo. Alberto, thank you. Welcome back. Nate and Jess, thank you for joining us once again. Nate and Jess. And by the way, Nate and Jess has their own YouTube channel. It's called Epic Travels and Frugal Living too, also as well. They had a few great live streams that I really enjoyed, and you definitely want to subscribe to their channel too, also as well. And also, I wanted to say that David Amex King Moss has officially started his YouTube channel too, also as well, where he talks about a lot of credit card rewards and travel rewards points too, also as well. So you definitely want to check out his channel and subscribe. Hit the bell for notifications too, also as well, when you get to his channel. That way you won't miss any of the content that he provides there on his channel. Also want to welcome one of our new viewers to the channel and the live stream, Victoria Matthews. Welcome. And if you haven't already, please welcome Victoria Matthews to also as well to the live stream. Thank you for joining us. We look forward to seeing you in many more live streams in the future too, also as well, by the way. Also want to welcome Supreme Deals and say special thank you. Supreme is also a new person here in our live chat, and thank you for so much for joining and participating in this live stream too, also as well. Welcome back to Bodyguard 856. Bodyguard, thank you for joining us once again. Bodyguard, Janelle and I, we didn't get a chance to go on Dwayne's live stream on yesterday. We missed it. But we were getting everything prepared and set up for this live stream. But we definitely going to watch that on the replay for sure too, also as well. And by the way, if you're watching this channel, you definitely want to check out Dwayne's live stream. Is every Monday at 7 p.m. Central on How to Build Credit TV. That's the name of the YouTube channel, where he talks about ways to build credit too, also as well. He does credit card reviews, and you definitely don't want to miss out. Great information on how to build credit there too, also as well. Also want to welcome another new person to our live stream, Carolyn Pace. Thank you so much for joining us this evening, Carolyn, and thank you for letting us know about Michael here, you know, and all the wonderful work that he does with credit repair for his clients. We really appreciate that too, also as well. And guys, when you get a chance, you definitely want to go over to Michael's YouTube channel. It's called Delta Credit Restoration. The name is here inside the chat, Delta Credit Restoration, or you can search for it on YouTube, right, Michael? And
yeah, definitely.
Okay, yeah, you can search for it on YouTube.
Guy, that's me. Yeah.
Oh, absolutely. You can search for it on YouTube, and you definitely want to hit the subscribe button, hit the bell notifications also as well. So every time Michael makes a video, you won't miss out on the great knowledge that he offers there. Also want to welcome another new person, Tamisha Henderson. Thank you so much for joining us, Tamisha. You're always welcome here. And thank you so much for being a part of this. To also as well. Also want to welcome back David from Travel Explore Click YouTube channel. Thank you for joining us, David. Janelle and I always enjoy your live streams on your channel too. You make so much of them. And by the way, people, David is making a trip to Colombia where he will be giving live footage from Colombia too, also as well. So you definitely don't want to miss out. So you want to definitely subscribe to his channel. He talks about travel rewards and points and how to travel the world for free and all that good stuff. So you can see his name here in the chat. You want to click on his name, and when you click on go to channel, hit subscribe, and the bell notifications there too, also as well. Janelle and I are usually inside of his live streams anytime he goes live on YouTube too, also as well. Very interesting live stream, by the way. We get an opportunity to play some fun games, to vote on different credit cards and accumulate, earn points and things like that. So it's definitely a great live stream you want to partake in too also as well. I also want to welcome Will Walker back again. Thank you so much for joining us once again, Will. And Ronald Anderson. Ronald, how you doing there, buddy? Thank you for joining us once again. Ronald is one of our old veterans here on our channel. He's almost always in our live streams all the time, and we really appreciate all the value you add to our streams, Ronald. Also want to welcome back Pink Lady Barber. Pink Lady, thank you so much for joining us once again. I did read in the comments that you said you were getting ready to get on a plane
to go back home.
To go back home too also as well. So I wish you a very safe trip, but I really appreciate, that you were still able to join our live stream and got a chance to hear Michael and what he had to offer here tonight too also as well. We really appreciate that, Pink Lady too also as well. And we want to welcome Mr. Chocolatazo. Mr. Chocolatazo, how you doing there, buddy? We really appreciate you, and welcome back to also as well. What are you showing me here, Janelle?
I had the question.
Oh, Cornell has a question. I got to go all the way down to the bottom of the comments here. Okay, this is a question for Michael from Cornell, Mr. Mentor Freeman. I'll put it up there on the screen.
How does equity work if I don't have my glasses on? If I plan to remodel my home, how do you get access to those funds? Well, if you're going to access the equity in your home, you're going to want to do, I prefer a home equity line of credit versus a home equity loan. And now recognize that the equity line of credit or loan is going to be based on the percentage of equity that you have in the house. So most lenders won't, on an equity line of credit, won't go above probably 85%. Some lenders may go as high as 90. Rarely do they ever go out to 100%. But really what you're going to need to do is get an appraisal done, see what the equity is in the property. And what they'll do is they'll say, okay, well, the property appraises for $300,000. You owe $200,000. So what they'll say is, okay, we'll go 85% loan to value. So they'll take 300,000, they'll multiply it by 85%. So 85% of $300,000, let's just say it's 275. Okay, I don't know what the number is because I'm, it's 11 for me. It's almost 11 o'clock at night, right? So, 85% loan to value. Let's say it's 285. You owe 200. That means they're going to give you 85,000, as an equity line because you owe 200, right? It's valued at 300. The loan to value of 85% is 285. So that's that 85,000 that you can get access to. So that's how that will work. Now, normally with an equity line of credit, that's a great place for you to, if you've got equity, I always say get the equity line. Even if you don't need it, get it when you can get it. Why? Because it gives you buying power. So next time you want to buy it, equity lines are typically going to be at around prime plus like 0.5%. It's going to be they're usually interest only loans. So you pay whatever you want towards the principal. So they'll give you typically either a 10 or 20-year draw period where you can pay it, use it, pay it back, use it, pay it back, use it, pay it back. And then you do that for 10 or 20 years. Then you have either a 10 or 20-year payback period. And so what it does is it keeps you from having to go to the bank to borrow money every time you need it. And for investors, it's great because obviously there's a delay in the credit report. So you're trying to sell this house, buy another one, and they see that you still owe money on this house, but you really don't because you've already sold it. It just gets all convoluted. So that equity line kind of prevents you from having to do that. One other thing I wanted to mention is that there are certain numbers that lenders are going to look at when you're going into the loan. The first number you're going to look at is your debt to income ratio. They're going to look at that. Typically, they have what they call a front end ratio and a back end ratio. The front end ratio is typically going to be about 45%. That's the standard nowadays. And that means of all your debts, including your mortgage, the payment can't exceed 45% of your income, including everything that's on the credit report. So you've got student loans, credit cards, car note, mortgage, all that is 45%. Of that 45%, 31% is your mortgage. So really the difference between the two is 14%. So you want everything that's not a mortgage to not exceed 14% of your income. Otherwise, what's going to happen is you still qualify from a credit perspective, but from an income perspective, they're going to limit you on how much house you can buy, which may not be enough house to really take care of your family size. So be cognizant of your debt to income ratio. Again, debt to credit ratio, keep it below 30%. Work history, 2 years. These are like really hard numbers that they're going to look for, and your lender can give you these numbers, but you want to keep the same job or at least the same industry for 2 years as you go forward.
Right. I had a question for you, Michael.
Yeah.
I was watching someone on YouTube talking about this same topic, but they had like a different spin on it. But they did mention about job history, work history, and they said that even if you had like another job, if it was within the same industry, that it was better. Is that true?
Yeah, you want to think you have to. If you go from being a plumber to an electrician or a custom or a phone rep to a real estate agent or whatever, that's not going to fly. You're going to have 2 years history in the same industry. Even if you're self-employed and you relocate to another location, not going to work. If you're a W-2 and you go to a 1099, not going to work. You have to show 2 years of consistent history in your job, and most lenders want to see 2 years of credit history on at least 2 trade lines. Right. Now, if you don't have that established, you can use what they call alternative credit, where you can pull in your rental history and your utility history, and the lender can a lot of times use that as alternative credit to qualify you for the loan.
Right, absolutely. Okay, so as far as like income and like the debt to income ratio, I know they take the debts and they divide that by the income. Sources of income. Now, can they include 401k, retirement? What about social security, disability income?
Anything that you can quantify and prove, they can use as income. So if you're on Social Security, bring the award letter. If you have a 401k and you are of distribution age and it's required that you take a distribution every month, you can get documentation from that plan provider or whoever's managing that 401k that you've got, and they can send you documentation to show this is what the projected income is going to be, and it's going to be the same for X amount of time. And usually each lender is going to have a certain amount of time that they're going to require that they're going to commit to that. It's like a student loan. If you go to a student loan and they don't show that that's a permanent payment for at least 12 months, they won't use it. So you got to do the same thing when it comes to Social Security or any kind of other income. You have to show it's going to last for a while. So whatever documentation you can bring to the table, the better.
Right, absolutely. Thank you for that, Michael. Also, Nate and Jess had another question.
Sure.
I'll put that on the screen now.
All right, what if it's a different position at the same employer? Doesn't matter. What I always tell my clients is, don't be egotistical. Don't worry about the title that you have. Just say customer service. You know what I mean? It doesn't matter what your title is. They're not going to say, oh, he's a manager. We need to give him this loan. No, they're going to look at the income and the consistency and the history of the job. So don't be caught up on titles because you may write yourself out of a loan. If you're with the same employer, you don't even need to mention it.
Okay, awesome. Okay, for everyone that's watching, also I want to put Michael's link, the link to Michael's YouTube channel. I know it's kind of long because I don't have a bit.ly link to shorten it, but that is the link to Michael's YouTube channel. I also put it inside of the chat. I know, Cornell, you had a question about that link too also as well. So I just put the link inside of the chat. So everyone, you definitely want to check out Michael's channel, Delta Credit Restoration, too also as well. So that way you won't miss any of the great videos that he puts out there on his channel. And if anyone has any other questions for Michael or for me too also as well, just leave them here inside of the comments too also as well. And also I wanted to recognize Dolly Lamas said she had to leave for a few minutes, but she was purchasing some plane tickets for her brother's family so they can see her dad who isn't doing so well. Oh, Dolly, I'm sorry to hear that. Well, I hope he feels better soon. Janelle also gives her get well wishes too also as well. But we appreciate you joining with us, Dolly, too also as well. So thank you so much for joining too. I also want to recognize our super chat that we got from David at Travel Explore Click. David, thank you so much for that $10 super chat, David. I really appreciate you, sharing your hard-earned money here to support the channel. Thank you so much, David, for that $10 super chat. I'm trying to go through the comments here because we got quite a lot of comments here to see if I can find that
everybody's saying hi to everyone.
That comment. But it seems like we had a lot of great interaction here, a lot of conversations going on between you guys, and that's a good thing because YouTube likes to see that. The algorithm likes to see interaction on a channel, people getting involved in the conversation. That's why I really enjoy live streams. I like making video uploads too also as well. Don't get me wrong, because those video uploads, they get a lot more views than live streams do. I mean, to be honest, they do, because a lot more people would rather watch a 10-minute video or 8-minute video than a 1 hour or 2 hour live stream, which I understand that, time is money. Time is very valuable too also as well. But I mean, I don't have that same connection, that same conversation going when I do video uploads. There's but so much that I can say inside of a comment to reply to someone's comment on a video, then I can say in a live stream, and that's why I like these live streams so much. And I kind of understand why even Credit Shifu, he made his first ever live stream. I guess he's recognizing that these live streams are getting more and more popular, on YouTube too also as well. So, I mean, that's why I love the live streams. Hopefully, Michael, maybe you'll be doing some of your own live streams one day, and we can.
This is my first. Yeah, this is my first live stream. I've never actually really done one. It's pretty fun. So yeah, I think what I'll do is we have every Thursday we come out with a new video about credit repair. So I think what we're going to start doing is in the morning we always publish our videos at noon Eastern time on Thursday, and I think we're going to start doing a live stream on Thursday night regarding the video that we put out Thursday morning or noon. So yeah, this is a lot of fun. I appreciate you having us on, and hopefully they've got some some good information out of what we talked about today. And I know I have a different approach to credit repair than most. It's not about sending the letters and getting it deleted. Really, what we care about is the financial freedom of our customers, right? Making sure that they're going to be able to not only accomplish this mortgage, but much, much more. It's not about the score. And it disgusts me that the bureaus and the credit, the FICO has been able to condition us to think that the score represents us. So really our message is really more about, well, how do you prepare yourself not only for a mortgage, but for anything else that you got in life that's coming your way to protect you along the way? Because love my customers, but I never want to see them twice. I want to make sure that not only do we have the credit right, but we've got the behaviors in place that will help protect them along the way. So when we make an effort to teach our customers everything that we know, because I don't care about their score. I want to make sure that they're financially sound. So I hope I got that message across. So as you're preparing yourself for this mortgage, remember, it's not about getting the mortgage. It's about keeping it. All right. It's about keeping that house and making sure that you can see it to fruition and pay it off. Now you're living rent free. You're living mortgage free for the rest of your life, and you can spend that money and invest it in something else, that's going to provide you a retirement or the long-term care that you need, or, that college money that you need, or whatever life throws your way. So you're not throwing it, to rent or something stupid.
Right, absolutely. And I want to take just a second, say thank you, Travel Explorer Click. I put his comment here two up on the screen that he gave a $10 super chat. David says, great show, Lyndon, too, also as well. Well, David, you got some pretty great shows yourself there, David. And by the way, people, we're getting ready to do a 6-channel live stream. And the 6-channel live stream collaboration is going to be with our channel here, How to Get an 800 Credit Score. David from Travel Explorer Click, too, also as well. Bob from Cakeology. I'm surprised Bob is not up here in the building with us. Normally he's on the live streams with us too, also as well. Bob talks about business credit, and he's a business coach too, also as well. And that's what he does for a living too, also as well. He doesn't have any other job, and that's his bread and butter right there. So he's really good at what he does. Too, also as well. And the first time we had him on his channel, we really had a great time, too, also as well. And we want to invite him back on our channel, too, also again in the future, also as well. So we're also going to have Dwayne from How to Build Credit TV. He has live streams every Monday night at 7 p.m. Central Time, too, also as well. Dwayne had just came back from a trip to Costa Rica, actually, and he made a great video too, also as well, while he was in Costa Rica, too, and we look forward to having him as a part of that too, also as well. And we're also going to have Flashpoint Capital. Flashpoint Capital, he talks about travel rewards points and how to maximize your rewards, to travel almost for free or close to it too, also as well, to get the most value out of your credit card miles and points too, also as well. So we plan on having him in a 6-channel collaboration too, also as well. And finally, we plan on having Will Schropp to he also has a YouTube channel. I believe he does live streams on Saturdays, I believe. I'm not quite sure, but I believe it's Saturdays he does the live streams. He also does video updates during the week too, also as well. He talks about travel rewards points and everything, but he gets more in detail about these portals. These portals that like American Express has, where you could go in these portals and you can find all the best deals on hotels, airlines, and you could get the most rewards out of it too, also as well. So
big thing on those reward points. Most of our customers that graduate after our program, they go and they get these reward credit cards. And actually, an old high school friend of mine named Eric, he went through our program, and to pay us, as a tribute or whatever, he took me, my girlfriend, and his wife, and him. We all went to New Orleans. I don't know if everybody's familiar with New Orleans, but we stayed at the Roosevelt on Bourbon Street using credit card reward points. It's amazing. So yeah, once you get through this process of credit repair, recognize it's a moneymaker. You can make money with your credit. And one thing I was trying to explain with my customers today, very apt, the $1 million client that I had today, is I had to, because I had no credit at all, no credit score at all, I had to understand, get them to understand you're losing money.
You're losing money, exactly.
You're losing money. Once you get to the point where you have good credit, you're able to borrow money at a rate that's less than what you can earn on your deposits. That's super powerful, right? If I can borrow money at 4% and earn a rate of return on my deposits at 5%, that's crazy talk. You know what I'm saying? And absolutely. It's not a normal thing to be able to do, but we're getting to the point. So once interest rates start to rise, that opportunity is going to be potentially lost. We did it back in, I'm old school, you got to forgive me, but back in like 1990, 91, when interest rates were much, much higher, that was, again, a practice that was practiced all the time, where you borrow money, take that borrowed money and invest it and earn more money than you borrowed the money for. So the credit, man, you got to understand that your credit is a powerful, powerful thing. It can not only generate your capacity to borrow, but it can also affect your capacity to earn income. So yeah, that whole idea of using reward points as income and doing things in life that really matter, because again, money has no value. What matters is the amount of time you put in to earn it, because you can make more money, but you can't make more time. So if I can take that reward points and create more time that I can spend with my family or friends and make my life worth living, more power to you.
Right, absolutely. Cornell just made a comment. Cornell says, thanks, Lyndon, for inviting Michael to our 800 credit home. Yeah, you're definitely welcome. We're glad to have Michael on for sure, too, also as well, because I had a great time. Janelle had a great time, too, also as well. So I appreciate you coming
it wasn't just me. It wasn't just me. I also have my partner in crime over here. Crime, I won't say crime. Brenda. So all of you that are talking on the internet, that's her. That's Brenda. She's been working the internet for us. So all y'all sending help to her.
Nice to meet you guys.
Same here.
So thanks y'all for all the comments.
Okay, awesome. So
She was doing all the comments. I got you.
Oh, okay. So if anyone else has any other questions or comments, just go ahead. Leave them inside of the comments section too also as well. So Dave, Michael, did you have anything else you want to share, like a Instagram link or Facebook
Yeah, we've got a Facebook page, so go to like the Facebook page if you don't mind. Most importantly, subscribe to the channel and hit that bell. When you add your information to our information, I mean, it just builds your repertoire of your arsenal of information. And that's really what we want. We want to empower our customers to understand what their rights are, understand what the rules are. What I always tell people about credit repair is that it's not rocket science, but it's not basic math either, right? It's convoluted for a reason. It's so that you don't understand. When there are laws literally in the Fair Credit Reporting Act that states that you cannot have help fixing your credit. If you look in 623AA, it says you cannot dispute with an original furnisher of information on your credit report with a letter derived from either a credit repair company or an attorney. There is a law that literally states that you can't have an attorney help you fix your credit.
Wow.
That makes you understand that you are not necessarily the priority. So understanding what your rights are, understanding what the rules are is super important, because it's all stacked against you. The Fair Credit Reporting Act were written by those companies, by the attorneys that were hired by, Equifax and TransUnion and Experian. It had people like Jamie Dimon that actually contributed to those laws. So you got to understand, the laws aren't written for your favor. Maybe the Fair Debt Collection Practices Act at the state level are, but not the Fair Credit Reporting Act. So you got to understand what those rights are. You got to understand the rules and the idiosyncrasies behind it. Now, what we always recommend is if you're going to dispute stuff, don't use the laws. Don't try to act like an attorney, because you're not one. Keep it basic, but know what your rights are. Don't boast. Don't say, according to the Fair Credit Reporting Act, such, you got to do this. Mm-hmm. No, because if you do the wrong law, they're going to hold it against you and you're going to lose, right? So what I say is just keep it simple, but know what your rights are. Like Roosevelt said, walk quietly, but carry a big stick.
Right, absolutely. I agree with that 100%. Janelle just left a comment, and she just wanted to let everyone know that Janelle and I just celebrated our 4-year anniversary last night, too, also as well. So, it was great, and we had a nice dinner this evening, too, also as well. And we kind of, celebrated with you guys, too. And it was
ironically, and our 3-year anniversary is this weekend.
3 years, did you say, Mike?
Oh, my gosh.
Yeah.
Oh, wow. Happy anniversary there, Mike. That's awesome. That's awesome. So
if we were close, we'd celebrate together.
Yeah. I don't see nothing wrong with it. Hey, we could always go out and grab something to eat, or, that would be awesome. Totally awesome. Mr. Chocolatazo says congratulations too, by the way.
Sure, but
And Nate and Jess says that's awesome, you guys. Too also as well. Oh, I wanted to ask everyone, have they heard from the Coin Alley by any chance? Because I haven't heard anything from him. I know he's been in our live streams quite a bit, but not recently. Not recently. And I also checked on his YouTube channel too, also as well, to see if he made any new videos about credit cards. I know he makes videos about like credit cards and Bitcoin, a lot of investing information, great content there too also. So if you guys heard from him, definitely let us know too also as well, because we wanted to ask him if he wanted to come on our channel, on our live stream, too also as well in the future. So let's see. Cornell says happy anniversary.
no.
×2.
All right.
Oh, okay. Did I miss a comment there, Janelle? Okay, let's see. Oh, okay. Cornell says, okay, Michael, do the live videos. I'll be there 100%. So I believe you said that was going to be on Thursday, Michael, the live stream?
Yeah. I'm going to attempt to do that this Thursday. Well, that's tomorrow, right? Today's Wednesday.
Yeah.
So I'm going to try and attempt that tomorrow. Again, new territory for me.
Okay.
But yeah, I'll wing it. What life's worth living.
Okay, what time is it going to be? So that way we all know, so we could join you over there.
I'm going to probably shoot for 8 Eastern Standard Time, which would be 7 o'clock your time, obviously.
Okay.
But yeah, we're looking at 8 o'clock Eastern Time.
Okay, awesome. Any particular topic you guys going to be talking about?
Not yet. We'll announce that tomorrow.
Right. Hey,
what happens every Thursday? We come out with a new video, right? So Thursday at noon, we come out with our video. The video that comes out Thursday night will be in relation to what we talked about at the noon video. Okay. That way people can ask questions and we can go deeper into the conversation, because really the videos are only between 3 and 10 minutes. So depending on how detailed we go into the topic, but I can't really address, like in a live stream, like you mentioned earlier, the specific questions that people have. So that'll be an opportunity for us to kind of go back and make sure that we clarify those topics, that people have questions on. Okay,
awesome. So I definitely should see that in my YouTube feed.
Yeah.
Do the video. So I'm definitely, Janelle and I are definitely going to check out that video too.
Just excuse me for any glitches, because I'm sure there'll be a couple of them in there.
Yeah, not a problem. So definitely, again, Michael, definitely want to say thank you so much for coming on tonight with us. It definitely was worth our while for sure. We enjoyed you for sure.
Awesome.
A lot of great information was shared tonight too, also as well. And again, if anyone has any other questions or comments for myself or Michael, definitely leave them inside of the comments for sure. And we will, definitely recognize it here. So Michael, you said you had a Facebook page, right?
Yeah, we got a Facebook page. Just look up Delta Credit Restoration on Facebook. We just put it in the feed. So it's there. And again, just if you don't mind, subscribe to the channel. We're way behind and getting to 1,000. So we need that number up there as quickly as we possibly can. Really, the ultimate goal for me is, so the reason why I want to get to 1,000 subscribers, as you already know, is that we can monetize. And then I can eventually, the goal is for us to be able to let YouTube pay us so that I don't have to charge my customers. Right. And so really, that's really what we want to do, is we want to be able to provide our service for free. But, I got 2 kids in college, so I got to come up with something. So, that's kind of the plan that we're going forward. So if you could subscribe, hey, that'd be great. And we really appreciate it.
Yeah, that definitely is attainable. The 1,000 subscribers for sure. I know our channel, we kind of hit it very quickly. Like within, I believe we made our first video in May 11th, and we got monetized on June 14th. So I believe
I've been doing it since October 1st of last year. I've hit 1 year as of 2 days ago. But we really were. It was really just something for our customers, so we really haven't tried to go out there. But the more we do it, the more we realize that this is an opportunity for people. That they don't teach this stuff in high school, right? So people need a resource that they can go to, and nobody wants to pay a bunch of money to get this information, and we recognize that, and we don't want to charge them. So if we can get this up and running where YouTube is paying us, hey, great. I'd take that any day over a customer payment. We just got to get there because, again, like I said, I got 2 kids in college and they're expensive. So
yeah, I can imagine. Yes, for sure. Okay, guys. So people, you hear that? We definitely got to get Michael up to that 1,000 subscriber mark for sure. So you definitely want to, if you haven't already, make sure that you click on his YouTube channel here inside of the comments, Delta Credit Restoration. Click on go to channel, and then when you get there, make sure you hit the subscribe button and hit the bell for notifications too also as well, so that way you won't miss a single video as he makes them there on that channel too also as well. And share this video everywhere. I mean, with all your friends and family on Facebook and all your social media networks too also as well. Don't forget to get the video a thumbs up. It helps with the YouTube algorithms and helps YouTube promote the videos even better too also as well. So I want to say thank you to all of you. Thank you, Michael, for being a guest on our show tonight. Awesome. We will definitely look out for that video tomorrow and the live stream tomorrow too also as well. And if you're interested in ways to build your credit, to increase your credit score, maybe you want to get approved for a mortgage, maybe you want to get approved for a business loan, line of credit, or maybe you just want to travel the world for free. Well, it starts with building credit. If you're interested in those things, make sure you hit the subscribe button and the bell for notifications too also as well. So that way you will never miss a single thing, any videos that we make here on our channel too also as well. And thank you so much to all of you who have joined tonight too also as well. And I want to say, make sure that all of you enjoy the rest of your Wednesday night too also as well. And make sure that you keep safe out there, you stay blessed, and we'll see you guys in the next one. Okay, bye for now. Thank you, Michael.
Thank you, man. I appreciate it,
guys. Awesome. All right, bye now.
Somebody had a question and you went off.
Oh.